Well, good morning there, Wealth Press subscribers, viewers, traders, and investors. It's time for another end of week wrap up, and I'm joined as usual by Mr. Roger Scott. Roger, how are you today?
I'm doing great. Thanks for having me on. I had a flu shot yesterday. I got to say, those flu shots, they really kill your arm. You know, they're little needles, but they they sure hurt for a few days afterwards. I'm all right. I'm just talking. How are you doing, James?
I'm good. I've never had a flu shot. And it's not that I'm opposed to vaccines in any way, shape, or form, but I always felt that not having a flu shot and getting the flu was the best way to build immunity towards the flu. So, you know, does that apply to coronavirus? I think maybe not, but that's the state of my union right now. So, Roger, we've seen quite a, I'm not going to say historically unprecedented, because it's just the fact of life that elections since the 90s have started to become very close, very contested, very polarized. 2020 was no exception. In fact, one could say that 2020 would be the poster child for polarized elections. And at this hour, we still don't have a clear victor, though it does appear that Mr. Trump is losing ground and Mr. Biden is gaining ground. So what is happening in where you live in Florida? What's the mood? I mean, with fully half the crowd Trump supporters and half the crowd Biden supporters, it can only be, mixed feelings.
Well, I'll tell you, it's actually quite interesting, because I'm glad you kind of asked that, because I kind of live in a little bubble in northern part of Florida. A lot of people consider where I live actually not technically, but like almost like southern Georgia, okay? Because I live all the way at the top. I live just a little south of Jacksonville, so we're literally less than an hour away from the border.
Right.
So,
so that's more Democratic territory historically?
No. It's very Republican territory, and
okay.
yeah. And as you go south, the more Democratic you get, all the way till Miami. So which is interesting, because Florida really is the only state in the country like that. There is no other states that changes its political tune as you go up or down. But Florida is that state. So it's a very interesting state, and we really this year we've had a different perspective. And I'll tell you what, a county adjacent to ours, I live in St. John County. The county adjacent to us actually voted blue, not red. I don't think that's happened in years. So what we're seeing here in this year is a very shocking contrast to what the people here usually see. I would say the mood here is usually more, if I had to guess, if I had to put my finger on the pulse, I would say it's about 70-80% Republican versus Democrat. But boy, oh boy, it just didn't play out that way. And that doesn't really necessarily tells me that people are moving their political ideology. It's just telling me that they weren't really happy with President Trump.
Right.
Based on what I'm inferring from this. Also, Arizona turned flip. If somebody was to tell me that Arizona was going to go turn from Republican to Democrat, I would say it's April Fool's somewhere in the world,
Right.
So there's and see, the thing is, I understand when one state gets really close, but when you're talking about Arizona flipping, when you're talking about so many of these controversial states, these battleground states that we're talking about, like Georgia, Philadelphia, Pennsylvania, and North Carolina. I mean, it's not like it's lopsided, and then once it's like that in all of these states.
Sure.
So that's it can't be a coincidence everywhere. That's what I'm saying. It's quite surprising, to say the least. Very, very surprising. Not to me, because as you know, I'm not very political. I'm a lot more I'm going where the market is, where the money is. I go where and look, the market's been really good for Trump. It's been unusually good for Trump. But as I've said earlier this year, and I'm going to say it again, the market has been pricing in a Democratic win for about a month. I've said this the last few times on your show. I explained how the Russell 2000 has been leading, how stocks that were Chinese stocks or evergreen stocks. We even talked about pot stocks. They had a nice little run up to this election. I have not been shy about this. And I still believe the only index that made a swing high since September 2nd has been the Russell 2000. Neither the S&P or the NASDAQ have been able to take out their September 2nd high, but the Russell did just yesterday. So it's not just the fact that everything's going up. It's the relative strength of these indexes, and small caps are loving Biden. And here's the thing: we still have a Republican Senate. So we're still sort of in the same seat we were before this happened. So I don't see this being a major extreme change. If Bernie Sanders took the presidency, and if the Senate became Democratic, then I would be very concerned. But this is a little more subdued tone. This isn't a full on, it's not left, right or left. It's just kind of in between. I could live with that. The market can live with that. I think the market is going to be very happy with that. And that makes me happy.
Yeah, good. So then what particular names or symbols do you think are going to be the first beneficiaries of a Biden confirmation?
The first one, and you will see that a lot of these are focused on the Russell. SE.
Okay.
Next one is SITM. Next one is ENPH. Enphase, we've talked about that several times. Next one is DQ. Next one is Plug, PLUG.
Oh, Plug Power. Yeah, I'm familiar with that.
Yep. Next one is NET, NET.
Okay.
And finally, CRNC.
And what CRNC do?
They provide AI-powered assistance for autonomous vehicles. 1 year return of 286%, and it's a Russell 2000 stock.
Fantastic.
All of these stocks are set to, these are all very, very strong stocks that have been outperforming the market by a factor of at least 10 to 1. And these stocks have been gearing up for a Biden win. You will see a lot of solar stocks in that list. You will see evergreen energy stocks in that list. You will see battery, evergreen battery for car chargers, AI, everything that has to do with new disruptive technology. And I think anything that revolves evergreen is going to get an extra boost because of Biden as well.
Is that right, Abe? Okay, so then what about the Chinese stocks? I mean, I've got to think that there's going to be a quick resolution to the Chinese trade war when Mr. Biden takes office in January. And that's got to have an uplifting effect on Chinese names.
Yes. As a matter of fact, one of them is in the list I just gave you, SE. And another one that I'm very, very hot on is JD. And that's Chinese biggest e-commerce. So you've got Baba, you've got JD, and you've got SE. Those are the top three, James. And I think those stocks, I think they have outperformed the market. But for example, JD, let me just give you a little taste of this. JD this year has returned 113%.
Wow.
Okay. This year alone. No, excuse me, 179% over 1 year. Okay. SE over 1 year has returned, just to give you some idea, 448%. 448%. And Baba has given us, Baba has been negative. Baba actually has been negative for this year. So Baba still has some, oh, no, sorry. I typed in the wrong ticker symbol. I was thinking that, how could that be? Baba gave us 58% this year.
Okay.
And the S&P over the last 365 days has given us, let's see here, 13%. So as you can imagine, we're talking about stocks that have substantial delta over the S&P 500. And you should also note, James, that I did some statistical studies after the election. This is very interesting, actually. This is something your readers will really find interesting. The S&P 500 rose in the 60 days following 7 of the past 10 U.S. presidential elections. Okay. Of the 10 sectors, guess what sector went up the most, that benefited the most?
Tech.
The industrial sector.
Oh.
The industrial sector. Now, because supporting factory jobs, manufacturing is the most common refrain during the campaign, but after the election, it really starts heating up. Because every president starts off with their big idea, the big infrastructure data.
Yeah.
So let me give you some more information. Since World War II, when the S&P 500 fell in the 3 months leading, and I printed and I gave all this to my readers, my subscribers, a week before the election. So this is very interesting information even now.
Right.
According to CFRA research presidential predictions, since World War II, when the S&P fell in the 3 months prior to the election, the incumbent loses. The S&P 500 between July 31st and October 3rd fell 0.4%.
Not a great deal.
No, but
a correction nonetheless.
It's a correction. And here's the thing. The market was predicting a Trump victory till just the day before the last Friday of that period. So it literally just took off the last day on a Friday. The odds changed. Isn't that interesting?
That's fascinating. Yeah.
Now I got something even more interesting for you. And the people out here at home definitely want to write this down. On election eve, I gave 12 stocks that have gone up substantially after every election and have outperformed the market since 1996. And I also gave 2 that went up after the election and outperformed the market, one by 15%, one by 13.5%, 60 days following the election. So you can buy an option on these if you wanted to. Now I'm going to give you 2 stocks that have gone up 60 days after every election, going back not to 1996, but to 1980.
Wow.
Are you ready for this?
I'm writing it down myself.
All right. Good. First one is ROK. It's Rockwell. And it happens to be, James, guess what industry it's in?
Industrials.
How did you guess?
I could feel where this was going.
And the next one, ticker symbol, is NU. And guess what sector this is in?
Industrials.
Basic materials. Very close.
No.
But you can't have one without the other.
Sure.
You can't do anything industrial without basic materials, you know?
Sure.
And it doesn't matter.
Are the foundation of industrials.
Of course. And you know, look, here's the thing. I don't care if you're building a fracking facility or if you're building a new solar evergreen plant. You're still going to be using sand, steel, all those goodies to build that stuff. You're still going to need material and industrial. I don't care which way you go, right?
Yeah.
So these stocks, folks, all jokes aside, these 2 stocks have gone up, have outperformed the market going back to 1960. And their average return, don't quote me on the numbers, one was up 14.5%, and the other one was up like 13.5% on average.
Okay, Roger, you said NU is the symbol?
NUE.
NUE.
Nucor. Nucor.
Okay.
Nucor. They rolling mills, furnaces, steel works. Going back to the basics.
Okay.
And speaking of tech, since you mentioned techs, I just want to let everyone know something about techs. If you look at the NASDAQ 100, the momentum levels on stocks that are trading above the 200-day moving average right now in the NASDAQ 100 is at 85th percentile. We're nosebleed levels. Not only that, we still have not taken the high out on the NASDAQ 100 that was made on September 2nd. I keep going to September 2nd. If you look at September 2nd, that's when the S&P and the NASDAQ 100 made an all-time high. Neither of them have been able to take it out, even though momentum levels are near those levels back again. That's a big, big warning sign. Big warning sign that we need to cool off, and we're cooling off on tech, and we're getting back into other stocks, other industries. Also, on my relative strength basis, which is very accurate, over the last 6 months, I use a 6 months, 3 months, and 1 month average. Basic materials is number one now. Tech has been leading all year, but basic materials is number one now, followed by industrial, and then consumer discretionary, and then tech. And on a 1 month basis, it's also basic materials. So right now, I can assure you that basic materials is outperforming tech on a relative strength basis. It's also not overbought. It's not diverging between the momentum levels. And statistically, as I said, tech is not where the action should be after this election. So everything is pointing away from tech right now.
Interesting. So is there any risk of regulatory sort of increase environmentally as a result of Biden's victory, as it might pertain to basic materials extraction and extractive industries?
I don't think so. I think his beef is going to be in restricting large tech. He's a pro-business guy. He's been in the business world for many, many years. He's not a Bernie Sanders. I think that it'll be regulated only as far as I think it's going to be regulated only as far as very specific sectors when they can show very, very strong harm to nature and so forth. But all those OSHA and all those environmental things, those things take years and years and years to pass through. Plus, the rest of the world is not waiting. And what U.S. is doing is if they don't get what they need here, they go to third world countries. So I don't see it as, remember, the world is becoming closer and closer. The world is becoming one, especially when it comes to natural resources. So I don't see it being a big issue. I really don't. Again, if Bernie Sanders was the president, I would say it's a big issue. In this case, I think it's I think with the Senate still being Republican, and with this president being moderate and not extreme, I don't think we're going to see as much regulatory damage as people think. Now, if Harris starts edging into that taking the seat, if something happens to what's his name? Biden. Thank you.
Yeah.
Oh, I'm not a Biden guy. But Harris, she didn't do California any favors, so she may be a little more negative towards the environment. But I think Biden is going to kind of try to make everybody happy. Look, I don't think he's stupid. He may be a little senile, but I don't think he's stupid, and I think he wants to spur up the economy. He understands the value of it. Maybe not for the benefit of showing off like Trump in terms of how important he is compared to the stock market, but in terms of I think he's going to start addressing the deficit. I think he's going to start talking about what you've been talking about for the last 7 months.
Right.
So and look, there's only one way out. Grow the economy. There's just no other way out. And who benefits first from economic growth? Industrial and basic materials. They leave all growth. I mean, you know this better than anyone. They are the catalyst of all growth.
Sure. So then with Biden firmly in the lead, I mean, the path to a stimulus package has obviously got to be a lot clearer now to everybody who's interested. What is that stimulus package going to look like, and what effect is that going to have on the market?
It's going to have a very positive effect on the market. With that said, I think the market has already priced. I think the rally that begun on the night of the 3rd, what's today? I'm losing track of days. Today's the 6th. The rally basically that we've had till today, maybe till yesterday, it was a substantial. I mean, we posted some of the best days in NASDAQ and the S&P since middle of this year, or beginning of this year, excuse me. We're now in the middle of this year. I don't even know where this year has gone, James. I mean, really, it's like a black hole, it's like a valley somewhere in between because of all this COVID stuff. But getting back to your point, I think the market is pricing in a substantial dose of infusion of liquidity coming into this market right now. The question is going to be if the expectation is better or worse than the actual, and it's too early to tell. We're just not there yet. But I could tell you with a great degree of certainty that this market is pricing in Biden right now all the way, all the way.
Interesting. So then, is it time for us to drop our defensive postures as it pertains to the stock market and prepare to be aggressive in view of the fact that the path to victory is pretty much confirmed and all of the uncertainty has been removed and we know there's going to be stimulus? So it's almost as if it's like take the goalies out of the net and put everybody on offense, because we're going into a very probably a really big lift in the market into the end of December. Would you say that's the case?
Not so fast.
Okay.
Not so fast. While I do agree with you that that's a very good possibility, I think we're going to have a major shakeout before December. I think we're going to shake out here's what I think. I think, and you've actually brought up a really good question. As you know, and I've said this many times, and I'm very consistent. I don't go back and forth. I believe the market is not being driven by this election. I think the market is being driven by the things that were set into movement as early as January, February, March, and April of this year. I think those events, the crux of those events, the Fed, the central banks, the Fed, I think what the president did, what Trump did, I think all of those events have put into a certain events into place, and I think those events are a lot bigger than this election, because you see, whatever Biden does, he has to do it within the constraints of this new world, this new reality we live in. It's not like Biden comes in, everything resets. Nothing changes. We still have to deal with COVID. We still don't have a vaccine. I had my annual physical yesterday, okay? I was talking to my doctor, a guy who actually knows stuff. And he said, look, there's a good chance we're going to have a vaccine next month or the month after. It's going to take 6 months to get all the paperwork and all the goodies for the doctors to start getting it in the office. He knows this because he's talking to the Department of Health. So this is a doctor, me and him in a room together, and he's telling me, like, here's what's going to come your way. We had a 15, 20-minute discussion. He said most of the stuff you're hearing out there is just a lot of noise. And we completely agreed. I said, this vaccine's going to come out. It doesn't. He said, absolutely. It's like we're just going to start asking the real questions a year from now. This thing is not going to disappear. It's not going anywhere. So you got to understand, Biden has to run the ship within these constraints. And a lot of these constraints have been shaped by the economy and by this COVID-19. So he's kind of going in with kind of one arm and one leg, kind of tied in. So there's a limited rails that he can go with based on that. Everything comes back to this. This is the kind of the root of everything. So I think that is going to be the big factor that shapes the economy, not Biden. Unless Biden starts doing crazy things, and I don't think he's going to. He's not an extreme kind of a guy. He's a career politician. He's not. I don't.
Still looks like the Senate's going to continue to be controlled by Republicans. So I think that's why there's so much effusiveness in the marketplace, is because everybody can see that Joe Biden can't exactly implement the Democratic agenda or his personal agenda as easily as he'd like, because he's got the controlling influence of a Republican Senate. And they've also lost a bit of steam in the House. So that makes everybody comfortable, because nobody can just swing the pen or the axe or anything.
Well, the way I described it this morning was it's like somebody walking an unruly dog. Senate is the person walking the dog, and the unruly dog is the president. And sometimes, the guy will let the dog sniff the flowers and do his thing, and sometimes he'll reel him in. But the bottom line is, whoever controls the Senate is the adult is the person in the situation. So that's how you kind of have to look at the presidency. He's got limited power, as we've seen in the last 4 years. The president can only do so much by himself, and then there's a lot of things he has to go through, and more often than not, he doesn't get his way. And so that's just how it works. That's just how it works. So I don't think we're going to have an extreme socialism. We're not going. It's not going to be the opposite of what we had in the last 4 years. But I do think that the COVID-19 and the stay-at-home economy and the stay-at-home climate is going to be the biggest factor driving this market, and not the presidency. I think that's going to take second place.
Now, so we've got the stimulus imminent, Roger. What about the price of gold? Because the last time 3.2 trillion in direct stimulus was printed in March, gold set its all-time record high and was up about $200, or a full 10% over its previous time 1 year prior. So do you think that we should be anticipating that kind of a lift in the price of precious metals?
Yes, I do, but maybe not even for those reasons. I think we're going to see uptick in metals because I think the US dollar is still going to be so low. There's very low interest rates right now. I think that a lot of the participants were waiting for this uncertainty to end. And I think a lot of traders are going to start appreciating gold as a hedge due to the potential volatility that we have over the next year. Remember, even when markets go up, there's still an increase in volatility. Volatility doesn't discriminate. Volatility increases when markets move, not when they're going up or down.
Mm-hmm.
So I think we're going to see a renewed interest in gold over the next quarter.
Great.
That's what I'm looking for.
Okay, well, let's leave it there for today. That's a great update. I really appreciate your input, and I look forward to speaking to you again next week. Have a fantastic weekend, Roger.
You do the same, James. Stay out of trouble. Stay safe, everyone. Bye.